Thanks for watching Inside Automotive with Jim Fitzpatrick.
Hey everyone, Jim Fitzpatrick. Thanks so much for joining me today on Inside Automotive. Now that President Donald Trump has signed an executive order imposing 25% tariffs on all imported automobiles and auto parts, the industry is bracing for changes. Joining us now to lend his perspective on the situation is Kevin Tynan, who's the Director of Research at the Presidio Group. Kevin, what is going on out here? I know a lot of people count on your observation of the market, specifically the auto industry, and your time at Bloomberg, and you joining me here, and now you're at the Presidio Group. We're so happy to have you on today because I know that, as I said, a lot of dealers want to get your perspective on all of this. There's a lot of dealers that are very nervous about a 25% tariff, rightfully so, right? What do you have to say about all this?
Look, and I think two things we can pretty much be sure of. One is prices are going to be higher, right? Even on the vehicles built final assembly in the U.S. and U.S. factories, because no vehicle sold in the U.S. is 100% U.S. made parts.
Right.
So even through the supply chain and the value chain of that vehicle, there are parts that are going to face additional increase in prices. So everything's going to go up in terms of price. The other thing is the way I'm seeing it in terms of the tariffs, there were, and just using 2024 as a basis for the numbers, 2024, let's call it 16 million new vehicles were sold in the United States.
Right.
Approximately just under 11 million were built in the United States, meaning final assembly.
Okay.
So to me, that puts 5 million units in play.
Mm-hmm.
Those are vehicles that final assembly is either Mexico, Canada, or imported from other countries.
Okay.
So somewhere between 0 and 5 million of those vehicles will or will not be built coming forward because of the tariffs, right? Because in the effort to balance supply and demand, somewhere those 5 million are in play. The only thing I would say from the perspective, now we understand why the administration is doing this, right? This is about jobs. This is not about the price that the consumer pays or really about the consumer at all. This is, if you want jobs and manufacturing jobs to come back to this country, you have to build here what you want to sell here, right? So you're going to break some eggs to make this omelet, which is prices are going higher, the consumer is going to suffer. You also, to a certain extent, the dealer feels a little bit of that pain in the number of transactions, right? Somewhere between 0 and 5 million fewer vehicles are sold through the franchise network, right? And so the additional revenue and profit that's generated from those ancillary businesses, whether it's finance and insurance or creating service customers, whatever it winds up being, there's a little bit of pain there also. But if you think about it, Jim, right, the most profitable year in history for the manufacturers and the dealers was 2022, right? That's when supply was the thinnest, aligned with demand, profitability, margins were through the roof. And remember, in 2022, this country, 13.8 million new vehicles were sold.
Right.
Way below where 2024 was. Right. So the idea that you can sell fewer units and actually be more profitable, there's evidence, right? We just saw it.
That's right.
3 years ago.
That's right. You and I talked about that. That's right.
Right. From that perspective, I think you're going to have manufacturers and dealers, especially the dealers, because, and I say that because manufacturers have capacity. And if you're not utilizing that capacity, it's expensive, right? Dealers, same thing, but they've proven that they can be wildly profitable. The other thing with the franchise base, like we talk about all the time, is that new vehicle transactions are just one part of the process. Right. You have that revenue diversity, and I don't think the pre-owned market is going to be great either. I think that's going to be very undersupplied and difficult margin-wise as well. But you have fixed ops, you have finance insurance. There's ways to make up for these lost number of transactions, but it really is going to be a case of doing more revenue and profit contribution with fewer transactions, which is not all bad.
Right. Yeah, and so those are kind of the, I guess you would call those the short-term implications of all of this, or And in terms of the long-term implications, I guess it might fall into the same category. Will this fundamentally change retail automotive as we know it because of the shorter supply of vehicles and perhaps stronger grosses, at the dealership level?
Yeah, there will need to be a little bit of rationalization of cost structures, right? So if you're a retailer or a manufacturer, this is more on the manufacturing side, but if you're a retailer who is sized for a certain amount of transactions and you can structurally expect that that number is going to be lower, you're going to have to make some adjustments to your business. Nowhere near what the manufacturers are going to have to make. But the other thing too, and we've probably talked about this a lot too, is that when you look at automotive factory capacity utilization in the US, it's very low, right? Fourth quarter was under 70%. And if 80 is the target, 80% capacity utilization is the target, because it gives you room to grow, but you're not paying everybody overtime all the time. And if you think about 80% is where you want to be, it's been under 75% for years, right? And it's 30 quarters in a row. So this is, if you think about those 5 million units in play, it's actually an opportunity, and I think this is the goal of the administration. It's an opportunity for those manufacturers with those factories to produce more, to get above that 70% and towards that 80%, because now you're not fighting against vehicles that were made in lower cost regions, be it Mexico. Canada is not really lower cost, but in other countries that are imported in that have made lower prices but are still able to make money. So this could absorb a lot of the underutilized capacity or automobile manufacturing capacity in the US as well. And that's really the goal of the administration. It's not about what does this do to prices in the showroom. It's about putting people to work in the factories.
Right. Good point. And then, of course, you've got factories as we speak that are looking at properties in the U.S. to say, okay, if this is going to be the way of the future, we need to be building and assembling our cars much the way Honda does and Volvo and BMW and so many others right here in the United States, right?
And if you look at it too, and the only thing that's you have to be careful of there is that does this all change in 4 years, right? But I would say structurally, that's what's been happening anyway, and certainly by the domestic manufacturers. If you look at Ford and GM and the Stellantis U.S. brands, they've sort of retrenched to North America, for years. I went back a bunch of years, and I just took Ford as an example. In right after the global financial crisis, so 2010, somewhere in that period there, Ford was generating more than half its revenue outside of the US. Today, that's about almost 70%. So, and that happened a little bit more organically. They struggle to make money outside of the US. In Europe, it's a very competitive market, small vehicles. They want to make big trucks, so you have you have your cost spread across basically different portfolios for every region, and you want to share as many parts as possible. So that happened a little bit more organically for the domestic manufacturers, which is to say our money is made in the US. That's where we're going to focus the portfolio. If those products happen to carry over to other countries, we'll export them and we'll send them there. But we're throwing good money after bad by trying to be in all these regions where we can't either scale and be profitable doing it. So it's a structural change that's been happening for a while. Nothing is going to happen fast enough, like in the next 4 years, where you're going to have you're going to have a manufacturer who said, "Oh, we had all this export capacity to the U.S. that now we're bringing, inland." But you could start to see those decisions being made, I think.
Right. I understand that the BMW plant that's in South Carolina actually exports more vehicles, right, than it sells here in the U.S. I mean,
and then you're gonna right. So there'll be a little bit of shift there, right, for the test. But every manufacturer really has truck capacity here. The car capacity is a different story, but almost everybody has domestic truck capacity, whether it's in a southern state or it's in in the Detroit area.
Sure.
Or California, there's truck capacity kind of everywhere. So I would expect that those factories would pick up some number of that 5 million units in play,
Right.
and satisfy the market. And I did look at the numbers, on the car side. If people were thinking like, hey, the only place you're going to find affordable vehicles is on the car side, and it's Japanese manufacturers, mostly Toyota, that have the affordable entry and mid-level car nameplates. But the problem there is that, again, the final assembly is here, but domestic parts, U.S. parts might only be 50%.
Right.
So even those are going to be more expensive relative to what the consumer knew before. So really, I think the truck side, which we're 82% truck here now.
Yeah.
That could go a little bit higher now, just because of the sort of profit bang for the buck that you get by building and selling a truck versus building and selling a car.
That's right. And it should be said that there's about 3.5 million vehicles sitting on dealers' lots right now, right? Is that about the right number?
Maybe about about 3 million.
3 million,
so,
okay.
And then whatever's in transit.
And those would be considered tariff-free right now, right?
Yeah. So basically, I think anything that left the port before, the 3rd or whatever it is will not be eligible. Which is why you'll probably wind up seeing a pretty robust number for March in terms of his seasonally adjusted rate.
Yes.
And even the not seasonally adjusted number, there may have been this rush to get in under that tariff wire, but that is going to be huge pull forward, right? There will be, there'll be a significant hangover in April, May from that. So in that sense, you're going to really have to look at a couple of months strung together to really see the impact of the tariffs. March is going to be indicative of really nothing.
Sure. I spoke to a couple of dealers yesterday, and they said they're already pushed their campaigns of the tariff-free inventory that they have. Hundreds of vehicles to choose from. We have the one for you, and they're all tariff-free. So I think we're going to start to see that, right? At least in April and May, until these vehicles get sold, right?
Yeah, and that's a good point too, right? Because you have a reasonable amount of inventory, and even when you think about the pandemic period, it wasn't until 2022 where that supply demand. I think it was around October, November of 21. So the fourth quarter of 21, where you saw transaction prices get above MSRP.
Right.
And then it stayed that way almost all the way through 22. So it took time to work through some of that inventory. And I think that'll be the case here.
Right.
To your point, is April, May, the only thing you get, and if you think about, tax return and tax season.
That's right.
So you have tariff free and a tax refund. April could wind up being a little bit of more of that pull forward.
That's
but
right.
somewhere there's going to be this hangover that says, that SAR may drop real low and stay there for some time.
Sure. What does this say about the used car market? I mean, huge demand, huge price spikes we're going to see on used cars as well, right? Much the way that we saw during COVID.
And I think everybody's expecting used prices to go higher. The thing that you have to watch too, right, and I've mentioned this before, is that when you look at the combination of low new vehicle volume going back to 22, 23, and low lease penetration, you're getting an undersupplied off-lease market, which 2025 is going to be the low. It'll be about 2.5 million vehicles, which would traditionally be 5 million.
Right.
So the problem that you have is, if this is a market that is supply and demand balanced at low volume, you're going to have that 3-year lag that is an undersupplied used vehicle market, which means prices are going to be higher. So acquisition costs are going to be higher for everybody. And then you're going to have the franchise dealer base competing with the consumer, who can sell it themselves for more.
That's right.
Or the pure play Carvana, CarMax, who have to obtain inventory, who may be more willing to overpay to acquire units. And I think, but at the same time, and this is what happened during the pandemic, if that's the fight in the used car market, and the franchise dealers, the full line dealers are seeing strong margin on the new side, they'll say, you guys fight that out. We'll go do this because margins are really nice on our new business.
Right.
And that's really what happened through the pandemic is that, and again, that revenue diversity for the franchise base can kind of step back and say, there's no sense in us overpaying for pre-owned inventory when we're earning double digits on the front end on our new stuff.
Right.
So that we'll be over here doing this while you guys do that. But to your point, I think that the pre-owned market could be undersupplied longer than I initially thought. I thought we started build out of it by 26. It goes back to 3 million off lease, and then close to 4, and then But if what we do in 25, you think about the pre-owned market of 2028.
Yeah.
And if this is a low year in 25, by 28, we're back down in that sub 3 million used vehicle market. And
right.
That's difficult.
Yeah, that is difficult. No question about it. And it will be interesting to see what happens on the leasing side as these sticker prices increase, because there's got to be some way that the manufacturers through subvented programs or, otherwise to roll this iron, right? I mean, I would imagine.
Yeah. And I think from the dealer's perspective, you're also thinking about, parts count or service base.
Yeah.
And so while on the one hand, the registered fleet doesn't expand as quickly as you'd like, you probably see, and also think about interest rates.
Yeah.
And like loan values, so terms extending really long. So you're going to have people upside down on their loans for longer.
That's right.
Which could lead to people keeping their cars longer as well. So maybe
right.
you make up for it that way, where
yeah.
there's fewer transactions, but you have an aging fleet, which is now like 13 years on average, that creeping up because you have now a 96-month loan that you're underwater on for 60 of those months, or some ridiculous thing like that. So
that's crazy.
So I think the dealer base is very creative and very nimble.
Yeah.
And they'll figure all that out. But there's gonna have to be a little bit of that, right? A little creativity and following the money and understanding, where the opportunities are and where the risks are in the market. Probably 2025 more than they've seen, at least since the pandemic, which wasn't all that long ago either.
That's right. That's right. So to kind of summarize here, dealers, just take a deep breath. It sounds like things are not going to be as bad as they sound, right? I mean, you've got less vehicles sold, higher gross profits, like we saw, to your point, back in 2022, 2023, when dealers, I say we all, I'm not a dealer, but when they were just like shoveling cash into their safe, right? And it could be that situation again.
Yeah, and hopefully the worst of it is sort of the wrath of the consumer, right? Because
right.
the dealers sit between the manufacturers,
right.
The government, and the manufacturer, who are sort of, forcing this kind of condition on the manufacturers, and then you have the retailers on the other side of it with the dealers right in the middle. So they're the ones that face the why is nothing affordable, why, and why is nothing available, and why am I paying over sticker? So there'll be a little bit of that, so it won't be completely day at the beach going forward. But yeah, when you think about it financially and structurally, it's not the worst in terms of profit per vehicle, profit per rooftop. I think it's just different. And again, if you just follow the evidence of the way things worked through the pandemic, which was a supply constrained period, there were parts of that from a profit and revenue perspective that were actually pretty favorable.
That's right.
And I would think that that's what the sort of breadcrumbs are leading towards this time as well. But uncertainty of do the tariffs stick, for how long? There's a lot of uncertainty still around this. But if you look at it as it's written, you would seem to believe that it's reasonable to believe that the franchise dealer base will see expanded margins and higher and firmer prices from this.
Almost every dealer that I have spoken with over the course of the last couple of weeks on this very topic of tariffs have actually, at the end of the day, been supportive of Donald Trump and said, we don't think it's going to be that bad, and things had to change with the trade situation with other countries, and they do see it as a way to get these other countries in line, and as well as even a national security situation, like Senator Marino mentioned when I interviewed him last week. He saw this as a national security issue. So
and I think a lot of this too, and we talk about this at the Presidio Group a lot, is a lot of the perspective is which seat you're sitting in.
Yeah.
Right. So now dealers want more transactions at the end of the day. But what's interesting when you talk about that and the perspective of the dealers is when you look at the UAW, right? Sean Fain, who was supportive of Biden-Harris.
That's right.
Or Harris eventually, is on board with this tariff thing because, again, its goal is about manufacturing and jobs. And I think we discussed it last time. And really the quote was, you can have affordable vehicle or you can have a job, like kind of pick one in this space. Right.
Good point.
And so what administration is doing is saying, we'd rather you have jobs so you can buy a vehicle that maybe it's a little bit more expensive, but you built it.
That's right.
As opposed to being at the mercy of an import vehicle of which we can't control the price, and you don't get to build that vehicle. You don't have the job.
That's right. That's right. Kevin Tynan, this is exactly why we love having you in, Director of Research at the Presidio Group. Thank you so much for taking the time and sharing your thoughts with our viewers. I know that they get a lot out of your visit with us, and this is just the information that dealers need at this time, so to kind of figure it all out. So thank you so much.
Thanks, Jim.
Thanks.
Thanks for watching Inside Automotive with Jim Fitzpatrick.